Good morning, good afternoon, good evening, wherever you are around the world. This is my final sort of market analysis. So usual format on these weeks, we'll have a quick look at some of the markets that I'm interested in trading and do some of my rather simplistic analysis. That's how I like to trade, nice and simple. And then I've got a couple of recordings from some of my live trade sessions last week, trading one of our prop firm accounts. To have a look at some of the actual trades we took. Again, you know, one of my main things in trading is it's very easy to take a chart and have a look at what happened and say you should have gone long here, gone short there, the classic trade educator thing. But you know, we need to make decisions into uncertainty, and that, as you well know, provides a lot of challenges of trading into uncertainty, psychological challenges that I'm sure many of you are familiar with. If you have any questions or comments, as usual, do put those in the chat, and I shall pick those up, and we'll crack on and have a look at some of the markets that I'm interested in trading. And have a look at what they've done this week. So this is the DAX, it's the German stock market. Now there's 40 companies in this market. I've not really noticed any difference really between the sort of 30 and 40. I'm not sure if anyone else has. Doesn't seem to make any technical difference for me. But we've had some risk-off behaviour. Clearly, we've got the Ukrainian and Russian situation that continues to evolve. There's global inflation worries. There's some of the issues with China we had the other day as well. I mean, I'm not a huge macroeconomic. I don't have a huge macroeconomic interest on the timeframes that I trade, even if I'm looking at daily swing trades. It's not something that massively interests me. I'm more interested in just looking at repetitive patterns in the market. But you know, there's no right and wrong in trading other than trying to consistently make profits and trying to manage your risk. So I don't get precious about my methodology or strategies, and everyone could, I guess, do what they're interested in. And the DAX is a little bit in no man's land at the moment, having broken that low that I had previously marked up. So I think it's a bit of a tricky one on the DAX. I mean, we can pull a relatively standard swing low to swing high Fibonacci retracement and have a look at things sort of halfway down the move. We have double bottomed with this low from the 15th of March. The issue is when you're retracing and you find a bottom, it's very easy just to look at what happened and say, oh, look at that perfect double bottom. But, you know, it hasn't stopped at previous lows. You know, it hasn't come down, tested further lows. There's a little bit of confluence with the 61.8. We've got the lows back here from the 10th and the 11th of March. So, yeah, I guess if you were quite aggressive and trying to catch the bottom, today's low would have been an ideal place to do that, although since I was in bed because I trade the US session, there's no chance of me catching that. I wonder if my trading partner did. I think I'd be interested to see what happens if we retest this, just zoom in a little bit to have a look at this price action. As we know from the previous weeks, particularly on index markets, resistance and support love to flip. So we've got this support point here. We've broken through that point. We haven't had a retest. So we may well find that previous support may become resistance. Now, one of the trades we're going to look at shortly will sort of emphasize this point. But you know, this is a common type of pattern. And if we zoom in, I'm a big fan of the pivots, standard pivot point calculation, only based on the in-hours price action, which is relevant for indices. I'm not interested in futures price action or overnight price action on the index markets. So for me, I'd be interested to see what happens here if we re-enter this zone. Market was a bit of a sell zone. That's from sort of 1382 or 13,872 all the way up to sort of 13,888. That I'll be interested to see if the DAX wants to sell. Ideally, what I'd like to see is the market come up, possibly just pierce up this high here, and then you get to the point where you've sort of gone through the door is the analogy. You want to see where's the buying appetite, where are the orders above this 13,888, and what you often find is the market won't find any buying appetite up here, and it will come down. You'll end up getting people who get long get squeezed, which has happened to me on many occasions. But those things happen. So that is probably the most immediate area of interest that I'm looking at on the DAX. If it has the strength to get up there, we probably need the US session. But I mean, that would be a significant move. You'd be looking at over a 2% move to get up there. But you know, we're not a million miles away in this volatility. It's only 100 points or fewer. So we'll have to see what happens there on the DAX, but a very commonly traded market on CFDs and derivatives. We'll just nip over to gold. I was actually long on gold. I've been stopped out break even now. I was long down on the rejection of this 1890. And the reason I've got this marked up as a buy zone is every time the market's been down here, look how wicky these previous candles were. every time the market was down here, there was buying appetite to take us out of this zone. So my anticipation was we'd see the same thing. I think I had my first profit target slightly higher, so it came up, stopped me out break even. That's fine. That's just one of those things, isn't it? Even if I'd kept the stop below the low where it originally was, I'd have been stopped out because I had a relatively tight stop below that low. So once I see a market start to reject a level, I tend to like to pin my stop relatively close underneath it or above it. Depending on the circumstances, it increases the risk reward. Sometimes you get flushed out, but that's just trading, isn't it? No matter where you put your stop, sometimes you'll just get taken out. Unless you get margin call first, then you could argue it's not your stop that got hit. Anyway, so gold, I'm just interested. I mean, it is on a downtrend ever since the 18th. I'm just interested to see here whether again, we're talking about these squeezes here, whether we can't find sufficient selling appetite underneath here. I mean, a basic correlation: the stock market's going up, gold going down. It's as old as coal, for want of a better comparison. But yeah, so I mean, I guess we'll see what happens here. I mean, if you were bullish and more aggressive on gold, I guess now would be a good entry. I'm not going to re-enter it at the moment. And you could just pin your stop below this low. So if you have got a bit of what we'd call a fake out below these lows, and the market is going to rally again, strong risk reward. But for me, probably just going to stick out of gold for the time being and just see what it wants to do. I mean, maybe if it retests these highs up here at 1911, who knows? There's nothing obvious from it at the moment. There's no harm in looking at a market and not seeing an opportunity. I mean, it depends how you trade. I mean, with me trading relatively simple price action patterns, I want to be able to put a chart on, and I want the patterns to jump out at me. I want that sort of subconscious pattern recognition to jump out at me, and that's because I've been trading quite some time. So I want to look at the markets. I want to see a sort of pattern in that respect. The stock market jumping over to the S&P 500, big US stock market coming down to that buy zone for me that I'm interested. We've got a really wonky sort of head and shoulders there. But this is where the market has found buying appetite ever since we projected ourselves off all the way back in June last year. Every time the market's been back down towards this, let me just get the figure for you, 4164, the market has found sort of bullish. I expect we're probably going to be gapping up. Remember, I'm only interested in hours price action. I don't know where the S&P cash market is projected to be. I haven't looked at that today. I expect with the DAX's price action, we're probably going to be gapping up, but I would have to wait and see. I mean, it's still 4.5 hours, 4 hours, 23 minutes until we open the US market. So a lot could happen between now and then. But certainly if we enter this zone here, this is where I'm going to be interested in buying the S&P from. I think down at this 4114, down up to this 4164. We'll see if we enter this zone. We'll see what the price action's like. Like I say, I expect, without looking at it, we're probably gapping up slightly, but that's the way it is. We'll look at one more market, and then we'll jump into some of the pre-recorded trades or the recorded trades I took last week, and have a look at those. Just have a quick look at cable. FX isn't my primary go-to. So, obviously I've marked up this one spot 26 level and it's just smashed straight through it. I didn't trade it myself, to be fair. It's weird. It's strange how sometimes you have an agenda of markets, isn't it? Like, about boring you to death, all the business that I do is in USD. And obviously we've been in the UK, the weaker the pound, the more that USD is worth. It's not quite as simplistic as that, but, that's what I like to. I mean, I just don't know with cable at the moment. It's looking weak. I certainly wouldn't want to get long on it at the moment. Is there an opportunity to get short here? Potentially. I mean, it's on a strong downtrend. It's a case of, I mean, there is a downtrend, and they have been downtrending all the way back here from the 31st of May. But where am I going to get in the market, and where am I going to place my stop loss? I don't want to get into the market unless I know where I'm going to get out, be able to get out of it. Not necessarily for profit. I can be a bit flexible with the profit targets. But in terms of the stops, I mean, let's look at it on an hourly time frame. Just very, very bearish here, isn't it? That candle yesterday at 3 o'clock, nasty stuff. I mean, maybe it'll come and retest. It's just had no reaction off this 126, really, hasn't it? A little bit on the hourly. Maybe it'll come back up, pull back. You'll be able to sell it there. But again, nothing jumping out at me on cable at the moment. It's not my go-to market, to be fair. But it all depends on what you like trading. I prefer trading indices, or people like FX, some people like commodities. So there's so many markets out there. You can easily find something that resonates with you. Right, let me just snap off some of these. This is from a trade room last week. This is one of our prop accounts evaluations. I'm currently doing a video series of how to pass prop accounts, or potentially how to fail them. Let me just figure out what these trades are again. What is this? A Nasdaq long. Okay, yeah, this was from last Tuesday, right? Okay, so this was we were just looking at price action here again. Again, this is important because this is showing you again the importance of trading. You know, not knowing what's going to happen. We don't know what's going to happen in the future. We can only trade what's happening at the time. And of course, the perverse thing with trading is you go from complete uncertainty to certainty, which has some pretty serious psychological implications, which I'm not going to go into today. So I don't wish you all to fall to sleep. But you can see here how we're working from this low of the 12th here, this 13,882. And the market has broken back above that level on the Nasdaq here. We've got uptrending on the DAX, we've got uptrending on the Dow, although sometimes the Dow and the Nasdaq are inversely correlated on the short term, as you see sort of rotation between the two. Got the S&P 500 moving up as well, and we've got these higher lows on the price action here, transitioning from one day to the next. So for me, I was quite happy to get long, just place a stop loss on MT4 there, just below the daily low, which does include the out of hours price action. And then it was just a case of having a look at how the market went, had a little bit of a pullback, and then eventually the market rallies up nicely, and we have our profit target just below that weekly pivot there. So thinking about profit, you know, when you're trading here, so you've got your entry around here, you got to think about, you know, when you're looking at your profit targets, what potentially gets in the way of my entry and my profit target, you know, and that, so you've got to try and inverse your thinking here. It's like if I was short on this from here instead of long, where would I want my stop? Well, I'd want it above the pivots, the weekly pivot and the R1 pivot as well. So we got, when you're looking at stop and limit placement, you've got to try and think in those terms of where may the market reverse, what might be a barrier between the markets, and between your entry and your profit target, you ideally want as few barriers as possible, whereas between your stop and your entry, you want as many barriers as possible. And again, sometimes I encourage people to inverse their thinking. If you're thinking about going long, try and play devil's advocate for yourself and think about going short or vice versa. Remember, you know, most of the time you're going to be doing your trading on your own, so you've got to try and be your own risk manager, your own devil's advocate. You're not in a sort of, well, I mean, it's not quite the same now with as many computers and algorithms as there are today, but you think about sort of traditional trading environments where you may have risk managers looking over you and you're working more as a part of a team. As a retail trader, generally speaking, you don't have that luxury where you've got someone who's going to be holding you accountable, who's going to be possibly playing that devil's advocate, who's going to be monitoring your behavior to make sure that you are trading in line with your sort of methodology. Anyway, so we hit that profit target on that trade there, and then the Nasdaq, when it fizzes, I think it went up a fair bit higher, to be fair, but I don't worry. You know, if the market goes on like that, I'm not bothered. You know, I'm happy with taking my profit where I've planned to. I don't try not to get that hindsight bias. Now, I spoke earlier about support becoming resistance and resistance becoming support. And this is a perfect example of that on the S&P 500, of how it often flips and rotates. So full transparency, I did actually get long on this level originally for a double bottom. It didn't work out, so I tried to cut a small loss there. And I didn't jump back in the market, didn't revenge trade it because that's just stupid. So you can see here how I found support back here from the 18th, or is that the 19th? Market comes down, breaks that level, comes down, retests the level. So what was once support now becomes resistance, and that encourages me enough to take a short position here. So what I do is I get short on the S&P 500, and then we're looking for a decent move. Our next major support's all the way down here at 4,300. We want to give it a bit of a margin of error. We do have this S1 pivot. We have the S2 weekly pivot, but you know, they're in the way of between us and our profit targets as we modify them. But you know, it's just one of those things. And again, this trade was sort of like, sometimes it's hard to switch your mindset. You know, only sort of maybe 15, 20 minutes before I was long, and like I say, I took a loss just below this low. But you know, but then you sort of try and zoom out a little bit, and you can just see the market's looking really heavy. You've got a technical indication the market isn't going to get bought back up, and you've got to try and have that mental flexibility to try and go short, and particularly when you've just taken a disciplined loss. You know, to get back into a trade straight away, you've got to make sure it's a legitimate trade and it's not a revenge trade. Because you know, you might face the very possibility this flicks up and takes you out in another trade, and you find yourself in two losing trades relatively quickly, and that's where traders tend to go crazy and do real big damage to their account. Anyway, so this is looking heavy. Playing devil's advocate myself, is there any way I want to get long on the S&P at the moment? Well, not now it's broken this low, not now it's retested the low. There's absolutely no way I'd want to get long. So okay, does that mean there's a good case for a short? Well, quite possibly. So we get short there. It looks like it's got some momentum. When I trade using one of our really high quality Fisher Price looking expert advisor. This puts in 3 positions in the market, so I'll risk 2% of my account here. It'll take 3 positions in the market, and then I can move those stops and limits appropriately. We've got a stop to entry button, which we've done there, so we've put a stop to entry, which I do when we get towards our first profit target, and then I've moved my 2 further profit targets out. So the advantage of scaling out is a really thing. It's something that I would really strongly consider if you don't. And the reason for that is that even in a winning trade, psychologically, it's very difficult to manage because, you know, if you've got profit, you're worried about losing your profit. You're anticipating regret. Regret's a very powerful emotion, so you may snatch profit in that respect. And then you've got the fear, you know, and then that's sort of on a scale with the fear of missing out. It's like, it depends where you're on that scale. It's like if I close my trade now and it carries on going, you know, I'll end up getting FOMO, then I'll get regret as well. And regret's more powerful when it's an action rather than a mission, but I really am going to curtail away from the psychological stuff. So scaling out in a practical sense is really important because it allows you to bank some profit. So if the trade does come back and either hit a stop or hit a break even, then you've banked some profit. But at the same time, if the trade carries on going, you still got a piece of the action as well. So I'm a big advocate of scaling out, whether you do it at 50%, a third, or quarters. Obviously, depends on your methodology. I think it's you know, even if theoretically, you know, you do some in-depth analysis and scaling out isn't more profitable in theory, you know, but unfortunately we're not robots, we're not machines, so we have to make sure we can psychologically say, I'd rather make less profit and stay psychologically resilient than have the opportunity to make more profit and tilt. And yeah, you won't hear many people say that, but that's the practical reality of being a human and being emotional. So, you know, theoretically, with this trade, probably adding to the position was probably the way to do it rather than subtract. But, you know, anyway, so it comes down, it hits our first profit target, comes down, it hits a second profit target, and then we hit our stretching profit target as well there. So there's a few lessons with those trades. The first one was, you know, the first one didn't work out, so we cut a loss. I didn't have that one recorded. It was too quick at the open. We didn't have that. We cut a loss on that trade. You know, a lot of people will be stubborn and not accept the loss and just carry on holding the trade, and that's when you get in trouble. And then we were disciplined enough to spot an opportunity and then run the opportunity. We tried not to let the first trade sort of win us. And these recordings and this live trading is just to give some sort of context. And like I say, it's very easy to take a chart and say what you should have done, could have done, but actually trading in uncertainty is a much trickier in reality. Right, let's have a look at Bitcoin. You know, speaking of another thing that I've got an agenda with, we hold quite a lot of Bitcoin because we pay people out in Bitcoin from our prop firm if they wish. So I want Bitcoin to go up, but you know, at the moment it's barely holding on to this ascending trend line, isn't it? We have this sort of wide channel here on this daily time frame here, and it'd be interesting to see where we start. I mean, a major level on Bitcoin's all the way down here at this 28,700. 750. Question, is Bitcoin more technical? Yeah, interesting history on Bitcoin. Interesting history on Bitcoin. James, I think that's just your issue if you're not getting sound and audio. It's certainly fine for everyone else. Yeah, interesting history on Bitcoin, because I first started looking at Bitcoin back when it started going crazy, when everyone was getting into it and your hairdresser was talking to you about it. But I mean, we did originally dip into trading it here on when it first became a CFD, and then all the brokers put the spreads up to silliness, and we just left it alone. I had a little dip into it with an unleveraged coin, but you know, because it looked like it was just getting hypes, and I was like, well, who can be the last idiot? Hopefully not me. So I did have a little dabble into it with that. But you know, the question was, because obviously as Bitcoin got more popular, was it going to behave technically? You know, that's the thing. It's a case of, is it going to behave technically, or is it just going to be everyone's going to try and buy it, and then everyone's going to get the heart broken and get the realities of trading, and then eventually, obviously, it pops back up. Big reality, because everyone was long back in 2017. And the answer is yes. And maybe, you know, Bitcoin has a futures market now, so perhaps, you know, that's part of the reasons. But you do see technical behavior on other coins like Ethereum and things like that as well. So, you know, we are looking. So it is tradable from a technical point of view, which is the only reason I pretty much look at it. So anyway, it'd be interesting. Major support down here about 10,000 away, which doesn't sound like, which, you know, some of the Bitcoin moves that can happen relatively quickly. I was looking at this intersection here, because we have this support level here at 37,000, and 44. And we also have this ascending trend line as well. So I was looking to see if we were going to get this intersectional cross here between these two trend lines. It doesn't appear that's going to be the case. It doesn't need to happen on the dime, but you know, I was thinking today, I mean, it would be tomorrow, it would be today or tomorrow, wouldn't it? Sort of straddling between candles. And I was interested to see if we were going to get a test here, and that was what I was interested in buying up from. But we've just stopped on the S1 weekly pivot. So that for me is an area that I'm interested in over today or tomorrow, is this 37044 to see if we do find buying appetite. If we find a rejection, we'll be able to have a tighter stop. If we're just going in on sort of an order, then we'll probably need a slightly larger stop given the volatility and daily volatility of oil at the moment. Let me just grab the Nasdaq here, one of my favorite markets to trade, absolute beast. So the Nasdaq is hitting into that buy zone that I looked at, that I have looked at the moment. I mean, where is the Nasdaq opening today? Let me just have a very quick, or where is it predicted to open, the cash market? That's obviously, let me just have a very quick look at the out of hours price action. Because again, my charts are only showing real data, so they're not showing out of hours because there's no such thing. We're gapping up 125 points. Yeah, we may well have missed this move, to be fair. 13,134. Not massively gapping up. I'm going to have a think. Once the market's open, I'm going to have a think and see where we are, because 100 points could easily disappear in the next 4 hours and 10 minutes before we open. Yeah, I mean, I think I'm interested in buying here, whether it's a dead cat bounce, and that's happening now with the out of hours gapping, but you know, we are on a strong downtrend. I mean, maybe, you know, 15% move on this downtrend. Are we going to get a relief rally of any significance, or are we going to break below? I think I'm going to stick my original plan and have a look at buying from down here. But then if we keep, you know, we're opening up about 130. If we keep putting pressure on this market, then it could well be timber. But the way the Nasdaq, you could easily get a short squeeze where it spends a little bit of time below level and then traps everyone. It'd be interesting to see. I would like to see the price action down here, and I would like it to give me an idea of what it's going to do. Whether it will or not, I don't know. We may gap up and we may continue rallying up, in which case I won't get on any move, which is fine. But yeah, we have hit that area of interest on the Nasdaq. So do look at this 12,967 up to this 13,020. That is definitely a level of interest. What else do people like to look at? Euro dollar request, not something I ever trade. Don't like this market. But I'll certainly have a look at it. Big level down here from 2020, the coronavirus lows that we do have marked up. It looks like it's breaking below those lows. We've had 1, 2, 3, 4, 5 negative days. From a technical point of view, if we do break back above that one spot 06360, I think there could be a long opportunity there. We're starting to lay a bit of a wick today, but if we do see that, as we've got the open up here on this candle all the way above this level, so you know, if we do sort of push back up there, we're going to have a lovely long fat wick that's going to indicate that there's buying appetite in the market, and there may be an opportunity to get long with a stop below that low. The short side, well, you know, I guess you just have to wait for pullbacks. It's not something I have a particular view on at the moment. Like I say, FX is not my go-to. I believe the gentleman who's going to be doing next month's analysis is a very, very versed in FX, so you'll get a much better view of FX from him than you will me. Yeah, just thinking about any other markets people are interested in looking at. I mean, like I say, for me, the indices I'm interested. The DAX is really, if the European market's given us any indication as to what the US markets are going to do, then there may well be a buying opportunity today, even if it's just a bit of a relief rally. Bitcoin, I would like to see come down to that 37,060. DAX, I'm interested in selling up here at 18,764. The S&P, I'm interested in seeing coming down between 4,114 and 4,164. Euro dollar, I'd be interested in seeing come above one spot 06360. And the Nasdaq, I'd be interested to see if it wants to retest between this 12,967 and 13,020. Just putting in the chat, we do have a Discord. It's for our trading education. Also, our prop firm as well. It's a very active community. It's not been up long. We've already got about 1,200 people in it, I think, or maybe slightly fewer. But it's growing very nicely. If you want to come in, share some charts, if you want to have a discussion with people, if you want to try and reduce the isolation of trading and sort of bounce off other people, see some ideas, feel a bit a part of something rather than sat in your home office or on your mobile or whatever you're doing, then please do come and join us. It'd be great to see you there. So I've been with you the last 4 weeks anyway. I hope you found some value in my input, and I appreciate many familiar names who've attended for all 4 weeks. I appreciate that. Yeah, time is precious and important, and so thank you for joining me. If you do have any questions or comments, do put them in our Discord. And if you need anything else, do get in contact with us. But I hope you trade safe and have a great week. So thank you very much.